Hello, sir. How are you?
Hello,
Welcome.
fine, fine. How are you? Bye bye.
I'm also fine. I'm also nice to see you.
Yeah, pleasure.
All right. All right. So we have students with us. So I'll introduce yourself, and the class will be yours.
Perfect.
All right. So, dear students, welcome to this class on financial services. Now, today we have with us Mr. Daxesh Kothari. By profession, he's a chartered accountant. He's a tax and financial consultant, and also the managing director and CEO of Ashutosh Financial Services Private Limited, which is a financial services firm. One and second, more importantly, the company which is focusing so well on the quality. So it is also an ISO certified company, ISO 9001 2015 certified company, and it is catering to all prominent fields of financial services. As an individual, he is presenting analysis on union budget since last 15 years, and is addressing to several of high cadre professionals like doctors, businessmen, industrialists, taxation consultants, chartered accountants, company secretaries, NRIs, and students, postgraduate students like of institutes of repute as well. He's also a writer. He's writing. His writings are published in several of the renowned publishers like Economic Times, Mint, The Lal Street, and by nature, is a 360-degree versatile personality, in the field of taxation and finance. And today we'll be talking on the new perspective of the financial service industry. So, on behalf of Institute of Management, Burma University, I welcome you, sir. You are most welcome, and we will be delighted with your presence. We'll be delighted with your talk, and this class is over to you. Thank you.
Thank you very much, Abhay Bhai, for a very nice introduction. And the topic today, the friends that I would like to discuss with you, is something which is like so much, very much important for all of us, for the reason that, say, if you are going in a ship and if you are not aware as to in which direction the ship is going, then you might end up at maybe a wrong destination, or maybe you might reach the place in a delayed way, or you might reach a destination with lots of hiccups. So, our destination today, where we are students of finance, is to reach a destination which will be the future of finance in the times to come. And if we are little unaware of what are the change and what are the emerging trends which are happening today, then we might end up into a wrong direction in the journey which we are on to. So the topic, as we have set in consultation with Abhay Bhai, is emerging trends for financial services in New Age India. When it comes to financial services, then we need to understand that which are the major areas of financial services in India. It might be, these services might be delivered by a bank, by a particular financial institution or an insurance company or whatever name we call. But the major areas of financial services in India are basically transactional banking. By transactional banking, we would mean transfer of funds from one person to another, from one party to another, where we know a bank commonly which transacts money from one account to another. Then another area of financial services is financial lending. Now, financial lending can be done by a bank, by an NBFC, by a financial institution, some private lending, or whatever kind of borrowing and lending mechanism which is in place in the country will be encompassed under financial lending. Then the another financial service which we need to look into is investments into financial assets. These financial assets could be wide range of financial assets across different asset classes, maybe debt, equity, commodities, real estate, and so many other things. Then insurance and risk management. Insurance in the times to come and right even today has gained a lot of prominence and significance when it comes to financial services. And last but not the least, and the very important and the dynamic area is investment banking. So these are the different areas of financial services in India. Now, what I would like to take you forward is that what are the kinds of changes and what are the expectations in terms of the changes and the dynamics which are evolving in each of these areas. Who basically leads these changes? That is one of the prime areas that we need to understand before going into what are the changes. Because these are the three factors which are the prime movers of changes in any area of financial services. The first and foremost is the actions of the regulators. The way the financial sector in our country and across the globe, and especially in the developed countries, the way the regulations are, is something which leads to the change and the winds of change in the entire financial services industry. The regulations day by day are getting more and more dynamic, agile, and if I would not hesitate to use the word little more stricter with the passage of time and the way the regulator learns from whatever events that are happening around. Then the next engine which is pulling the change, and very much right now and in last few years and across the world, is fintech. The advent of technology in the entire financial services arena has been something which is changing the entire face of financial services. And the third and one of the most important aspect is the changing profile of the customers. All those people who consume financial services are in the times to come, and the people who are going to make the change are the millennials. So these are the three major areas which are going to drive change. Now we will look into, in respect of each of the services which we were talking of in the earlier slide, how these things are going to get impacted. The first area, I think the title is incorrect. It's not the engine of change, it is the transactional banking. The transactional banking would change in the way it is as of now from a clear cut without any delay peer to peer payment. So I will explain what I mean. In the case of transactional banking, whatever is happening today is that I draw a check to somebody, then I need to deposit, the party whom I'm giving the check need to deposit in the bank, and after a couple of days I will get the credit of it. Okay, and if I am transacting on an online basis, then the monies would get transacted through the banking channel from my account to the account of the recipient. So in this entire process, there is the bank which is involved. There is a cost, the time factor, and everything where a bank is a party which is involved. This becomes very significant when the payments are made outside of the country. According to a study, a good amount of cost, a certain percentage, and a thick percentage of cost gets charged when monies move from not just one account within the country, but when it is outside the country. So the entire mechanism that is evolving in the space of transactional banking is that we don't want any intermediation. Can we not find ways and means whereby there is a complete peer to peer payment from the giver to the receiver and there is no intermediation involved? And if at all there is an intermediation involved, it is at the least cost. Then how will this happen? This is going to happen with the help of emergence of payment portals. The payment portals, we know quite a few of them, and there is going to be a very strong emergence in times to come of so many payment portals where serious kinds of payments. Today, smaller amounts are transacted between individuals through these payment portals, but these payment portals would get a recognition wherein even payments which are of larger amounts of businesses and statutory payments would also get transacted through these payment portals. Then the advent of cryptocurrency. Cryptocurrency is nothing and which is very much a comfort area for people who want to transact money outside of the country seamlessly in a peer-to-peer manner. So this is the way in which a cryptocurrency, somebody might like it or not, governments might like it or not, but would creep in the overall transaction, the amount of transaction that is happening. Today, the extent of payment may be legal, illegal, or whatever kind of payments which are supposed to get transacted, the smaller amount of it is done by cryptocurrency. But over a period of time, different jurisdictions would recognize these payments as lawful payments, and it would be something which would find a lot of comfort in peer-to-peer payment. And as I said earlier, that the physical activity which is happening today in terms of transacting funds from one person's accounts to another account is going to be, in my understanding, in times to come, something which would be an absolute history. The prime advantage in this entire process would be that there will be no delay in the transfer of funds. So there will be two aspects: that the cost of transfer of funds has to be minimal, and the transfer of funds in transactional banking has to be immediate. So the entire advent that is going to happen on transactional banking side will be on these two counts. Then we'll look at the another area, which is financial lending. In the area of financial lending, what I understand is that credit related appraisals are today done on the basis of the submissions and the papers that we deliver to the financial institution or a bank, whosoever is lending. In times to come, the entire engine of Fintech will work in the manner that the entire lending, and especially the retail lending, would be completely electronic. And a very strong advent has started in that direction. And in times to come, as I foresee, it will be absolutely electronic without the intervention of anybody who is as such the seeker of a lending. The independent sources of data, independent sources of information would be the areas which will supply information to the lender. And on the basis of that, the entire evaluation of the credit or the credit appraisal, as we say, will be done. So in times to come, we will not have to submit any papers, but the process will be that my GST account, my income tax, my every other thing, whether my defaults or everything, would be absolutely electronically checked. And on the basis of it, credit appraisals would be done. These credit appraisals in the times to come are going to be quite swift, robust, and agile risk management mechanisms would be in place, and that will spur lending. Now, What do I mean by this? Robust and agile risk management mechanisms. What I mean is that the moment there is a learning that I need to do this, I need to cross check for an NBFC, for a bank, those things would be done from time to time, and that kind of an algorithm or that kind of a marking system would be evolved and changed on a dynamic basis to see that the quality of lending by any institution or any lender for that matter is very precise and flawless, and credit rating, credit appraisal is by and large something where they don't falter. So it will be an evolving mechanism of how a lender behaves and what are the trends and what are the sources of information which are developing in the economy from time to time. And as I said, these things have started becoming prevalent and become more and more prevalent, especially on the retail lending side. So the net effect of this, what I perceive is that the cost of borrowing for the borrower is going to be much lower, much competitive in the times to come, because a lender would be comfortable on the basis of a good deal or a deep rooted analysis of credit appraisal. At the same time, there would be several players in the economy who would be ready to lend in this mechanism, which is by and large quite seamless. Then the next area of financial services and the way the things would get impacted is investment in financial assets. In present times, we feel that financial assets are bonds and fixed deposits and those kinds of things. But in the times to come, so many of the physical assets would get converted into financial assets. Say today, if I want to make an investment into real estate, then I will have to buy a piece of property or a real estate and make investments. But in times to come, and the way, as I said, one of the engine of growth, who are the millennials, they are not comfortable buying real estate, taking care of it, and doing all the necessary things in respect of that. They are interested in buying financial assets. And when it comes to investing into real estate, but in the mode of financial assets, the answer to it is REITs, Real Estate Investment Trust. As friends, you would know that real estate investment trust, there is a property which is in most of the cases a revenue yielding property, and that property is put in a trust and units are sold. So I can participate in the property, or I can buy that property in a small fraction by buying those units, wherein I will get a share of the rental and whatever is the appreciation when the property is ultimately disposed, if at all. So I will be participating in a real estate through a financial asset, which is REITs. In India, this process, as we all know, has started, but there are certain hiccups on the side of the regulatory part and especially on the taxation part. They are removed in a progressive manner, and so many of the real estate developers and so many of the entities who are holding real estates are finding a favor of it. So this is an area which is going to change, whereby physical assets and especially real estate in India, which is one of the major avenues of investments for Indians, would get transferred into as such financial asset. Then infrastructure assets, roads, power plants, and so many of the infrastructure assets, in the same way, they would yield certain revenues from time to time, and those assets are put in a trust and units are issued, and those units can be bought by somebody, whosoever is interested, where they will participate in that revenue stream, and on the appreciation of the asset on a pro rata basis, and that is through the means of InvITs, which is Infrastructure Investment Trust. So the InvITs and REITs are like our mutual fund units, but the underlying asset in case of REITs is real estate, in case of infrastructure it's InvITs. Now the same holds true for precious metals. Today it is cumbersome buying precious metals because there is a buy and sell differential in the value of the precious metals. At the same time, what happens is there is an incidence of indirect taxes, which is very significant. So investment into precious metals through the means of exchange traded funds, ETFs, and sovereign gold bonds, which is very much prevalent in India, is a means by which the investments into precious metals in future times is going to be as such through the mode of financial assets, but the underlying assets, as I said, are physical assets. The same holds true for commodities, which is maybe like copper, nickel, aluminium. Today, we don't have ETFs of these commodities in India, but these commodity related ETFs can be bought or can be acquired on the foreign stock exchanges very easily, even by Indians, by transferring money from India under the liberalized remittance scheme. And this is something which is definitely going to come to India, where broad-based participation into commodities as a means of financial assets will be possible. Then the next trend which will start emerging when it comes to financial assets in a big way is global investing. Global investing is becoming a new normal today, wherein the investments from India are channelized into global stocks or global ETFs. Today, the valuations of the Indian stock exchanges and the stock markets and the prices at which the various financial fundamentals like the price earning ratio are brings a little discomfort to some investors. They can, in the times to come, in a big way, look onto global investing, where the valuations of so many of these stocks which are of a peer industry are at a very attractive or a level which is much lesser than that what is prevalent in India. The price to earning ratio of Walmart is much lower than our D-Mart. So these are the areas which are emerging, wherein people would be quite comfortable or would like to go into investing into global investments. The another advantage of global investing would be the currency advantage. Today, the major investments of our Indians are very much centric in Indian rupee denominated assets. So over a period of time, with the advent of global investing becoming more and more prevalent, people can think of investing not just in foreign stocks, but in foreign currency denominated investments, and that would also act as an advantage when it comes to appreciation or the rationale of investing into global investing rather than centering the entire investment in India. This is a trend, as I said, has started picking up and will pick up more and more in the times to come. Then the next avenue which I see that will start emerging and which will happen more and more, and this is very much started happening in last 1 year, not just in India but across the globe, is with the activation of the Fintech platforms, wherein maybe a zero brokerage, comfort of transacting into equities on a very seamless basis through all the electronic devices. so many of the millennials and so many of the people who are interested of investing into stock market would start looking at investing directly into equity. Because today what is happening is that people have their own ways of thinking, their own perceptions, their own ideas as to which all stocks, which all sectors will start doing good. They have their own loads of information which is coming through social media and through various other electronic means, where they apply their mind and they develop a conviction, and they would like to put that conviction into practice by investing into those respective stocks. So, this is an area which is going to emerge as an area in times to come, wherein stock market investing will be on a direct basis, buying equities of whatever somebody might feel comfortable on a direct one to one basis. Then, in respect of areas wherein investing is through the managed route, wherein somebody is investing into equity based mutual funds or portfolio management services, these areas of investing through the managed route might come under a good deal of challenge in the times to come, for the reason that it will become more and more difficult for the fund managers to really beat the benchmark. Today, yes, there is a scope wherein the fund managers have a legroom of investing into mid cap and small cap stocks, which are by and large not a part of the benchmark, and where a lot of conviction, lot of homework, and lot of due diligence is something which is the forte of a fund manager. But when over a period of time, when the economy develops, when so much research is available in respect of the stocks which are listed on the stock exchange, the challenge for the fund managers would be to beat the benchmark. Now, this is something which I am drawing the understanding from the fact that this is exactly what is happening in the US, which is a market which you can call as a mother market. So many things which has happened in US in respect of financial assets with the lag of time have come to countries like India. So in those markets, those developed markets, it is becoming much more difficult, or very much difficult, for the fund managers to really beat the benchmarks on maybe on a couple of years, okay, but on a sustained basis, on a year to year basis, it's becoming quite difficult. So this is something which can definitely happen in India in the times to come. Then the last area, insofar as financial assets investments is concerned, is the fixed income option. Today, the corporate debt market in India is quite shallow. There are fewer kinds of debts which are traded on the stock exchange on a regular basis. And that I foresee there would be a large amount of securities in terms of corporate debt which would be listed on the stock exchange and would be available for the investors to invest in. Today, whatever are the securities which are available on the corporate debt side are the issuances by a few financial service NBFC kinds of or bank kinds of companies. This I understand would get broad based for the reason that a corporate would find it convenient and worthwhile and advantageous financially in terms of removing the spread of the banking system, whereby they will directly access the capital markets, get the funds from the investors directly, and move away or get rid of the spread with the banking channels would charge by channelizing those investments into lending. So this will hold true not just for corporate debts but corporate fixed deposits also. And so many of the NBFCs and good quality NBFCs have been doing this successfully. Then one another area of the fixed income, which will in times to come become very much prominent, is the issuances of perpetual bonds. Perpetual bonds market in India is rather nascent, and whatever there was a bad experience from one of the leading private sector banks led to a little discomfort for the buyers of perpetual bonds. But in times to come, the perpetual bonds is going to be one of the areas where people find would take a calibrated call in investing into perpetual bonds. Just to clarify, that a perpetual bond is a bond in which it is for perpetuity. There is just a call date, and the as such it is a perpetual bond. There is no date on which the company is supposed to pay back that money. They have a call option to give away the money at a prefixed date, but that is always a risk associated, that on that call date the company who is the issuer of perpetual bonds might say that we want to roll over and we don't want to pay today, and they are within their rights not to pay on the call date. And another feature of a perpetual bond would be that they might deny the payment of interest in case of the triggering of certain events in terms of profitability and in terms of not meeting certain balance sheet norms, and the issuer might not pay interest on those perpetual bonds. So these are the kinds of risks which are associated, but a thoughtful buying of these perpetual, or thoughtful investment into those perpetual bonds, and that is going to be something which will be the norm in times to come, where somebody takes a call with a lot of understanding, and that can give them a return which is at least 200-300 points better than the other kinds of fixed income investments. Similar to perpetual bonds are bonds with subordinate debt status. These bonds would hold a status which is subordinate to a bond which is a secured bond. So the rate of interest on these subordinate debt bonds are also little on the better side. There also a considered call of and a proper evaluation might shore up the returns, and these kinds of products are going to be the norm of investment in the times to come when it comes to fixed income side. And on the fixed income side, last but not the least, something which is very much common for all the Indians is that they find a lot of comfort investing into government-backed fixed income investments. My understanding says that in times to come, government will definitely slow down their intervention in the debt market and will keep a very few of the options in the fixed income side which are government sponsored schemes. Of what I understand, and which is something which is very just, that they would keep options for people who are senior citizens, people who are, say, maybe a girl child or those kinds of areas where they really want to support savings and would like to provide some kind of a surrogate pension kind of a thing. Those kinds of areas would be the areas where they would continue. Otherwise, they will slowly start withdrawing from the government oriented fixed income investments. Then one another area, and a very important area in the emerging area of financial services, is insurance and risk management. The insurance industry, as everybody without any exception agree that it is going to grow by leaps and bounds, and it is going to be exponential in the times to come. Today, whatever are the processes that the insurance companies are following, in the times to come, of what I understand, the entire marketing, sales, operations, claims, everything, every other processes would be absolutely fintech driven. And this is the way this entire industry is going to expand. And that is the way they are going to adopt technology. And only then it is going to happen that they will be able to reach every other corner of this country. And this has started happening and has started happening successfully. The net result would be that insurance premiums are going to get a wallet share which is going to be much more than what it used to be or what it is as of now in times to come. Slowly and steadily, we will see that out of our total expenditure, insurance is going to be an expenditure which would definitely be on the rise, and we will gladly pay those insurance premiums for the reason that we will start understanding the need for insurance. Today, a lot of insurance, especially on the life insurance side, is happening on the basis of it being a route of investments where tax arbitrage is available. I understand that slowly and steadily the government would put all the investments, may it be through the insurance route or may it be through some other route, which are known ways of investing, they will be all at par, and there will not be a premium of investing through the insurance route whereby one would be getting, and the way somebody is getting tax arbitrages today. Today, as the law on the income tax side as it prevails, that if the sum assured is 10 times of the premium, then the entire receipts on that insurance policy is completely tax free. So this acts as a major tax arbitrage for somebody to invest money through the insurance route. Then the last area, which is a area where India is now taking a lot of, or rather gaining a lot of steam, is investment banking. Today, investment banking and mergers and acquisitions are something which is very much limited to large scale, big time corporate activities. But in the times to come, investment banking is something which will see a definite rise and a big time rise. The reason for the same is very clear, that today now the Indian promoters have understood that if they do not pay to the banks or the institutions who have lent, it is very definite that one day or the other, with a little delay here or there, they might lose the control of their businesses, and those businesses might be sold out to somebody who would be a bidder and would pay a price which the promoters would have thought that this was not the right price for my business. The reason why I'm saying is that during the NCLT bidding processes, there were promoters who also thought that let me also participate as one of the bidders in my NCLT related bid of my own business. So what does this show? That they thought that the value for which my business is going away from me is much less than what I perceive or what I understand is the true value of it. So the best course of action for them would be to invite fresh capital, infuse fresh capital by way of some kind of an arrangement, which could be a strategic partner, which could be maybe a private equity firm from abroad or India, and try to see that the control and management remains with them for the company which they have nurtured all these years. So this is something where they will start understanding, and the investment banking activity would definitely find a lot of interest in the times to come. Moreover, the way the Indian promoters are understanding things, that we need to be of a global scale to compete globally, and we need to be area in the areas of our core competence. They have started understanding the value of consolidating their various businesses in the manner that they are somebody who are a global formidable force, and they will be able to do that and concentrate on that very business. So this idea of consolidating their businesses in for the reasons which I said will also lead to lot of investment banking activity which is going to happen in times to come. Now I would like to state something about the fintech thing, which is something which is happening on the startup ecosystem. Today we see that there are so many players who provide platform. Mark my words, this is my analysis, and my understanding of things, which I would definitely like to share from, and would like to make you understand to its core. Today, for a person who is on the IT side, with the partnership with somebody who is on the finance side, can definitely create a platform for transaction. Through this platform and otherwise, through the means of the entire fintech ecosystem, you can provide a lot of information to people. So platform and information is something which is abundantly available today. But the area where everybody in future needs to concentrate on is that in this process, am I providing right solutions to the people? So if I create something which is an application or maybe whatever kind of an fintech arrangement, I need to be very clear that am I providing solutions to the cross section of the people and to the people who are really material. Then only my entire startup or my fintech venture would definitely work in on a sustained basis. Otherwise, there might be so many people who might flock the place and might be able to do so many things on a similar lines, but the only strength and the only hooking point for people would be if you are able to provide solutions rather than platforms and informations. So we need to find ways and means where we can stand apart in this overcrowded world of fintech. Then another most important thing which I see is that there is a strong threat of people who copy things. So if I develop a platform, if I develop an information system, then for people who are on the IT and the finance side, they know that, oh, this is the way somebody is successful providing a platform. Then there are so many copycats who would immediately start doing. And you will get lost out in this world of so many similar kinds of products which are available. But in my understanding, if there is somebody who can combine a physical setup and couple it with fintech, then it could be a fantastic solution, a solution which could be far reaching, and it would be on a sustained basis. The examples are that of an Amazon. Amazon, we see that, oh, I transact electronically and everything happens. But there on the back end side, there is a huge logistics, so many things, supplier management, and so many things which are happening on the back end, which are not something which are not just fintech. There are so many other aspects which they take care of very flawlessly, and that makes them a successful kind of a venture. And the same holds true for maybe an Uber or maybe a cloud kitchen kind of a concept. So fintech is just the front, but at the back end, there is a fantastic infrastructure or fantastic physical setup which is working. Now, the reason why we need to learn, we need to keep ourselves, our eyes and ears open on all these things is that if you are a manufacturer of financial services, or if you are an intermediary of financial services. By manufacturer of financial services is that if I am a mutual fund, if I am an insurance company, I manufacture different products. I manufacture insurance plans. I manufacture, say, investment funds. So those are manufacturers. A person who is lending is also a manufacturer of credit. Right? And all those people who are in the process of selling those products and making it reach to the end user are the intermediaries and the users of these products. So all these three kinds of people who are, and wherever somebody is, say I'm a manufacturer or an intermediary or a user, I need to keep my eyes and ears open on whatever is happening around and see that whether I am on the right course or not, or I need to make appropriate changes to see that the winds of change are working to my advantage and not against me. With these words, I will just thank you for giving me a patient hearing and patient listening to a little complex kind of and a futuristic kind of a topic, wherein these are all my ways of thinking. I really don't know whether these things will find rather acceptance with so many of the people around. But these are my ways of thinking and my learnings. With these words, if I will be ready to take some